Welcome to SF Live. This is John Feneck of Feneck Consulting Group LLC. Great to be here again.
Fantastic. Awesome. It's great to have you on, John. Thanks for coming on. Really appreciate it.
Sure.
Best intro we've had on the program so far. Absolutely. By far. Best intro. This is the first time we're doing it in person.
Yeah.
We've seen each other a couple times over the last few months, actually. It's great.
Yeah.
But we haven't done an interview. Actually, need to get a little closer.
Sure. No problem.
Great to have you in Vancouver. You're actually leaving this afternoon. You came with your suitcase and everything. You've been here for a few days. How was the experience?
It was good. You know, it's good to see people again and you know, get out. And this is one of those first, you know, live conferences, as you know. And I haven't been to Vancouver for 2.5 years, so it's great to be here again.
2.5 years, eh?
Yeah.
Wow.
Yeah.
Time flies. Anything that stood out? Like, let's talk about it. There was obviously a conference in town, the Vancouver Resource Investment Conference.
Sure.
Why don't we start there, sort of summarizing the mood a little bit, sentiment.
Yeah.
What did you pick up?
I picked up that it wasn't as euphoric and exuberant as usual, which I like, you know, as an investor, because I think people are coming to grips with the fact that it's becoming a difficult market for them and that they are going to have to hunker down more. And I think, you know, our sector sometimes needs that kind of, you know, look, we have that negative overhang from the 2011-12 period, that is, where people are overpaying for things, and there's still that perception out there with a lot of, you know, bigger investors that this is a kind of just, you know, like throw money recklessly at things kind of sector. And when you get that kind of humbling kind of price action that we've had over the last 4 weeks since we had our last interview, it was kind of a laid back, you know, more, you know, less exuberant kind of mood, which is okay.
No, it's true. Like, I've been down there, I made it through a couple of aisles. It hasn't been euphoric, as you said.
Right.
And today's the first day actually of the weather, the mood, and the markets align.
Yes.
So
yeah. Beautiful day today.
It's actually quite nice.
GDX almost up 5. We'll take it.
Absolutely have to.
Yeah.
You mentioned we chatted about 4 weeks ago.
Yes.
Let's run a bit through the history of the last 4 weeks. What has happened? What has changed?
Sure.
Let's put the market a bit in context.
Yeah. So we had a Fed meeting in there, obviously May 4th. We got exactly what the market had baked in, which is 50 basis points. The Powell presser after that was not unexpected. I thought he did a decent job. It's hard to walk a tightrope. You know, at this point in the cycle, they still have to remain aggressive in terms of raising rates, according to them. I mean, according to, you know, just about every other investor, they don't want to see 7 to 8 hikes this year, which would be the equivalent of 175 to 200 basis points, right? And I think that would be extremely detrimental to the markets. You're seeing that play out in the broad market, especially since May 4th, where, you know, we had kind of some selling going into that and a brief relief rally. But then, you know, since then we've had 3 days over the last 10 trading days where the NASDAQ, the QQQ, has been down over 4.5%. You know, that's significant. I mean, back in the 08-09 crisis, if you had a day of over 2% down, that was a significant move. Now you're seeing double plus moves like this, and people are losing a lot of money quickly.
Yeah, and losing money quickly, but they're going into cash. Right?
I would
Is that
imagine,
where they're putting?
I would imagine. You know, I mean, because I think last week, I really don't want to get too much into the crypto thing because I don't know all the specifics, but I do know just from reading individual stories of investors and just, you know, how much money they've lost in some of these cryptos. I'll say it again, it's an unregulated market. We haven't touched it ever. You know, when it becomes regulated, we'd be interested. You know, it's just right now, you saw that kind of risk play out last week. I want to be able to sleep at night with my risk. You know, if I'm down 40% on a gold junior, hey, I know the CEO, I know the CFO, I know where they're drilling, I know that I've been to the mine perhaps, or the project. It's like I can sleep with that risk. I can't sleep with someone wakes up on the wrong side of the bed and sells all their crypto, and it creates this cascading effect, and I'm somehow, you know, down 90%, right?
Now let's talk a bit more gold price action in the last 4 weeks. Like, we're almost down. Let's be frank, almost $300 from the peak at 278 down to 1810. Let's say 268. Sorry. But put the gold price into context now. Like you mentioned, the QQQ dropping massively, but gold is hanging in.
Gold is hanging in because, you know, that support level is, I think, I'm not looking at a chart, but 1770, 1780. And we didn't get there. You know, if we got there, we bounced really sharply off of that, which is a good technical sign. And so when I tell people, you know, of course we all want 2,000 plus gold, right? But getting to 18, I guess today about to 18, 25 plus, you're still in that range that we were in before, you know, like meaning Q4 of last year, where we're in that trading range of 1750 to 1850 for months. That's a healthy range to be in because you look at the all-in sustaining costs of some of the majors. They're between, let's say, 1,000 and 1,100 an ounce. Kind of in that ballpark, and you're still making a lot of margin. So I don't think this gold price is detrimental to the producers, and I still think that it would be a different conversation, Kai, if we were at 1575 gold. I'd be super worried. And be selling a lot. Going into that, right? I don't think we're going to see that kind of test. As we say in technical analysis, you're making a higher low on gold. If you look at GLD, March of 2020 chart to now, you've made a series of higher lows along the way. And that's a positive technical chart. Nothing's broken there yet.
What do you think the Fed rate hikes are? How are they affecting the gold price?
Significantly. I mean, if you see the Fed go dovish or just go flat at a meeting and don't do anything, I mean, you're going to get a massive rally, but not only in our sector. I think the broad market would love that, right? It's like you've already seen what 75 basis points year to date has done to the broad market. It's cratered the QQQ, the IWM, anything with risk, momentum. This is what we've been saying on podcasts like yours since November of last year publicly, like that this Fed aggressiveness is going to have to wane. No one knows what that's going to be, but I would guess probably towards the end of this year, early next year, they have to back off their thesis of just continuing to raise rates.
Yeah. No, somebody's mentioned on the program as well. I think it was Jeff Clark here yesterday as well. Like he doesn't see it going past 2%, the Fed fund rate.
Mm-hmm. Hard to say. I mean, I think that they're going to use the Russian war as an excuse to back off. I think that if things really escalate there, they can easily do that. If you listen to Powell's comments May 4th and the previous meeting, he was referencing the war in both of those. So I just feel like they can't follow through on this. Let's just raise 25 to 50 bips every single meeting from now to the end of the year. It's just going to destroy the broad market.
Feels like it. It's like I was looking at it as well because what does it do is like it increases mortgage rates.
Yes.
So like I was trying to see how it affects inflation. We're at 8% over 8% inflation. So how does a higher Fed fund rate sort of counter that? Because it feels like the core CPI numbers, none of that basket is sort of affected by the higher Fed rates. Because higher housing prices or mortgage rates, higher oil prices really don't affect the CPI numbers per se. So I was trying to make that connection mentally. It's like, so how does a Fed fund rate hike affect CPI? How do you reel that in? Like, where's the connection? Can you enlighten me?
I really can't. I mean, I feel like the CPI number has been talked down for months and it keeps going higher, right? Like, I mean, everyone that talks about a lower CPI has been wrong. The last read was another 0.2% higher than the previous read, right? And so it just keeps going higher, making 40+ year highs. It is a problem. The average global investor is feeling it at the pump, feeling it at the supermarket, etc.
Yeah, I'm curious, like, what's it going to do to the summer in the U.S. as well? Like, the Americans love to travel domestically, obviously. Right. They take their cars, pickups, they go up to the hot springs and wherever they go. And they don't have much time to vacation anyway. They're only 10 days usually a year, and they usually stay local. So I'm curious to see how that the higher gas prices affects domestic travel as well.
It'll be interesting because the flights just to get here to Vancouver, for example, was $199 when we had the original meeting in January, and now it was $605 to get here in May. So it tripled, and that's a result of what we're seeing with Russia and higher prices in general, right? And so does a family of four making $50,000 a year have the ability to do that, spend $2,400 on tickets to Vancouver, and then whatever on the hotel, whatever on the car rental, whatever on doing stuff for fun? It's a lot of money, and so I think for us, we've been shorting travel and leisure since last December.
Wow. Okay, yeah. That's quite bearish in that regard because we got the Disney cruises leaving here.
Yeah, no, I hear you. I think cruise ships. If you saw what happened with CCL a week ago, they had 0.3% of their members were quarantined, which on a 2,000 person ship. I mean, what is that? 6 people, and it literally cratered the stock, and it just hasn't recovered. It's like, because no one wants to get trapped on anything with no Wi-Fi, right? Like, this is the world we live in. If it's your kids, if you're a business person, you need connectivity. And so that's why I'm not going on any cruise ships anytime soon. And we're shorting cruise ships, I mean, for that reason, because I don't get it, the business model in this in this cycle, even though they keep saying in their earnings reports how great things are going, and I'm not buying it.
It's tough to, yeah, it's like when you're pragmatic and you have your own experiences, right? It's like,
Yeah.
why would you?
Yeah,
Doesn't make any sense, but
Yeah.
apparently bookings are going up, apparently. So
they are, but at what price, right? Like, I mean,
Yeah.
they're dropping the rates. If you look at the promo ads, it's like, bring one on for free, or we're going to do 70% off this, or it's like they say they have pricing power, but they really don't.
Yeah, you hinted at a couple of things that you are doing in the market right now. Like, what is John Feneck doing? We're going to get to the mining stocks in a second, but how are you playing this? Like,
Yeah.
this space, right? Overall, like the market right now, how are you playing it?
Yeah. So we're continuing to hold positions that we feel very comfortable with, that we've built over time, where we have good CEO relationships, and we just feel like the projects are still chugging along, doing what they're supposed to do. And we're going to continue to add on weakness. That's what makes our service a little bit different, Kai, than some of our competitors. I really respect Dave Erfley and a couple guys out there, but they usually buy once or twice, and that's it, right? We buy 7 to 10 times sometimes, on the way down like here, because we want to get a lower blended price. And so on days like Thursday of last week, was that May 12th, days like yesterday, where you have these, waterfall, 4 to 8% down days. I mean, you have to buy more if you really have conviction in what you're doing, right? If the story isn't broken, you buy more. Now, that thesis didn't work in the 00 to 03 kind of sell-off, where for the first time as an investor myself, I was like, buying the dips, and it just kept getting lower. But it was a much slower bleed back then. I think because of algorithmic, buying and selling now, you have to be quicker with your actions, right? Like, you have to have a game plan in place, meaning, okay, at this price, I'm going to buy more of this stock, and then at this price lower, I'm going to buy more there, and you set up limit orders accordingly. So that's what I do. I buy usually like 2 different orders at a time, probably 10% away from each other, and then adjust them accordingly on days like yesterday, so I can move them up slightly if I need to get filled. But we're staying true to our thesis and buying the precious metals as well as the industrial metals, meaning the metals, but mostly the mining stocks. And then we're shorting retail, we're shorting international. We've been short China and emerging for well over a year now, and we continue to short on dips or on rallies, right? We continue to not believe that these things are going to continue to move up because the chart's telling you that they're still in a downturn. Yeah.
Interesting. Okay. Last time we didn't have much of a chance, but let's talk about more mining stocks. Like,
Sure.
What is John Feneck buying, selling, or holding?
Sure.
What are you honing in on? You said you buy on dips.
Yeah.
Buy the dip.
Yeah.
Almost at the F word. Can't do that because otherwise YouTube will demonetize us, and it's not a good thing.
It's not good.
But run us through a bit. Like, what are the top 5 stocks in your portfolio right now, and give us a bit of a background of the story.
Okay, sure. So top 5 stocks. AUMN is our number 1 position, which is gold and minerals. We like what they've done at Rodeo to generate some cash flow. They're about $12 million in the bank right now, so there's no need to raise. Another positive right now, as juniors, that have to raise right now are in trouble. They're going to do it at very low prices. They have no debt. They have about 188 million shares outstanding, but about 50% of that I can account for between Sentient and Barrick and Hecla and me and some other larger investors, right? So like, when you look at the actual float, it's probably in the 90 million range. We think that at 37 cents, I mean, it's like a huge value because they're going to restart Velardania. That's the thesis that I have. And that mine, if you look in 2015, it's 7 years ago, they restarted it. It was a huge game changer for the company. It went from 51 cents to $1.53 in a month. Not going to happen this time in terms of that euphoric move, but you're going to get a lot of love because I think a lot of analysts and investors still don't believe that they're going to do it. But we talk to the CEO once a month, and they're still on track, and their earnings report dictated that last week. U.S. gold, we mentioned on your last show, at higher prices. We were wrong. I think we mentioned that around 525, if I remember correctly, and now it's in around the 450 range. They had done 2 raises this year. One surprised me. They literally, had a positive press release, and this is now public information. A larger institutional investor called them out of nowhere. They had no relationship with them and said, let's do $5 million at this price. I mean, who's going to turn that down, right? It's like, beautiful. So, I mean, we'll take that. However, it did hurt the stock a bit because, anytime you do a financing, with any warrants attached.
Price and,
sure. So the positive is they have $7+ million now just out of those two raises, plus whatever else they had in the kitty. So they're cashed up as well. So, we like stocks with good management that are sticking true to their story that they laid out, that don't need to raise cash, right? When I think about the rest, GLDRF has become a top 5 holding for me just recently based on their April news. That's Idaho Champion Gold. And the reason is that, in talking to the CEO, I said, you have these cobalt properties here that you kind of mentioned at the bottom of your press releases. Tell me more about that. And so I looked into Idaho and how prolific it is for cobalt. And Jervois, which is a beautiful looking chart, is literally adjacent to Idaho Champion, and Jervois is a big. They're going live with a cobalt mine this year, so they're right nearby. If you look at the April news, they have an MOU from an Asian company that is undisclosed for I think 9.9% of the company, but definitely an accretive, nice thing that you're seeing a lot of international interest in cobalt, right? And so I think that asset is real. They have more claims, which is around the 650 claim mark, than Jervois. They have more claims than anyone in Idaho for cobalt. So when you look at their other properties, Champagne's their number 1 property, Banner's their number 2. They're both 100% owned. I think they'll do something, right? They'll monetize Banner, they'll monetize cobalt. This is all public information. It's just a 4-cent stock, and you're like, in full disclosure, I participated in the offering last year at 12, and I'm buying more here at 4. I'm not telling my followers to do something I'm not doing, right? It's like, I want my average cost to go from 12, 4, you add that together, it's 8, right? So if the stock goes to 9, I'm actually up. That's where I find that the average investor makes mistakes, is that they make bad entry points, like I do sometimes too, like a year ago, 2 years ago, and they do nothing about it. They just hold, and that's not a strategy. You buy more when it's cheap, So
averaging down,
averaging down is huge. It's got to happen, and it's painful, but you got to do it. And then as I go through the rest in my head, we like Canadian Palladium is my favorite Palladium stock. I'm having lunch with the CEO right after this. I think it's 6 cents, actually 0.057 right now. It just tremendous value there, but Palladium's been struggling. Because of platinum potentially replacing palladium, in catalytic inverters going forward, and palladium is heavily produced in just South Africa and Russia, 80+% of the world's production. So there's some questions, I think, between investors as to how palladium moves going forward. But to me, when you have Russia controlling 41% of production, Russia's a wild card, Putin's already showed his hand. It's like, why would you trust this person? It's like, so palladium is going up in my opinion, and so I buy the little companies or the big companies that will have leverage to the palladium price. And then lastly, there's a stock I really like in the lead zinc area, which I haven't mentioned before, which is Vendetta. They, much like Idaho Champion, got a nice piece of news in December of last year from an Asian company that put $4.7 million forward to help them. Again, 4-cent zinc stock getting $4.7 million. It's like, no one cared because it was tax loss season, but then they followed that up with a March press release talking more about that, and then the stock got a pop, and it's gotten some support here. But I think, again, lead and zinc in Australia, 16 to 18 months from production. It's like they're probably well ahead of their peers, that are probably 2 to 3 years behind them.
Now, one common theme I'm picking up here is staying in tier 1 jurisdictions. You're staying in the U.S., Canada, and Australia.
Yeah.
So you're not venturing out to, let's say, South America, Peru, Chile, or Africa?
Not much. I have a couple of names in Peru, but it's because I think Castillo is going to be gone next year, because we've already experienced the sell-off pain from his leadership, and that's baked into prices. So I think there's some great values in Peru right now, and I see a lot of companies, CEOs going out to hunt, down new territory out there on the cheap, right?
No, fantastic. I'm a big fan of Peru personally. I've been 2-3 times.
Okay.
At projects, and I just loved it. The energy is positive. It's so prospective. I think it's one of those frontier destinations that once they get their political situation figured out,
right,
might actually explode in
I
a
agree.
positive sense.
Yeah.
So
yeah.
Fantastic. John, thank you so much for joining us here.
My pleasure.
Great
Jack.
pleasure. You coming to the studio always makes for such a better conversation.
Yeah.
I always enjoy it.
Yeah.
Fantastic. Thank you so much. And of course, enjoy lunch now and enjoy a bit of the weather.
Thank you.
Much appreciated. And let me just switch cameras real quick and do the outro. Thank you so much for joining us for this SF Live. Let's call it a conference special. We had so many guests here in the studio this week. We'll be releasing all the videos over time. And please do hit the like and subscribe button. It's much appreciated, especially smashing that like button will help with visibility. We do appreciate that very much. And if you have any questions for John, just leave them in the comments below. We'll forward them. John might see them as well. And we'll definitely forward or connect you with them as well. Thank you so much. And John, FeneckConsulting.com, I think, is the website.
Yes, it is.
Fantastic. Awesome. Thank you so much. And we'll be back very soon.